Hey, thanks for taking the time to watch this video. In the next 10 minutes, what I'm going to cover is the alternative investments in multifamily investing and the secret to growing your wealth without having to give up your time. So, what I want to cover more specifically, what you're going to learn today is how investing in apartments can accelerate your wealth and reduce what you pay in taxes. And here's the good news: you don't have to deal with the tenants, the termites, or the toilets. So, what I want to do is I want to start with the problem that we all have. So, if we're working in corporate America, we're working these great jobs, we worked really hard, we have very limited options. So, the problem with our traditional investment options are number one is we have this stock market volatility that we're always having to deal with. And what's challenging is stock markets can swing very widely based on the market speculation or economic news. And then we also have these high tax burdens. And a lot of us don't even know this, but our W 2 income, it's taxed at probably one of the highest rates. And here's what's even harder about that is we're working to get this money and put it into retirement, but our retirement accounts, they're also taxed. Whether you're doing pre-tax or after tax, you still are paying tax on that. And then the third problem we have, and we're trying to do investments to accelerate our wealth, maybe retire faster, retire with more money, is they're time consuming. So many professionals, here's the reality: we try things like single family rentals, Airbnbs, flipping. And what we find out is we got another job and we've actually made things more difficult for us. Now, look, when I first started investing in apartments, I did it at probably the busiest time in my life. When I started, my son was about 2.5, 3 years old. My wife was pregnant with my daughter. We were in the process of flipping this house. For work, I was working for one of the fastest growing companies in the Fortune 500. We went from like a Fortune 458 to a Fortune 20 or 25. Just crazy busy in my life. And I had tried flipping houses and I found out like it was hard. I got myself a job. Like I did not want to mess with that. And when I started investing passively in these apartments, I went from chasing contractors to getting mailbox money while I was changing diapers. And so what I'm going to do is I'm going to share with you what I've learned over the last almost 8 years with apartment investing and how I've been able to actually quit my job. And I just do this full time. So I'm just going to cut straight to the solution, right? We just talked about this, but the reality of it is there is a solution to all of this. And I'm going to peel back the layers of this and I'm going to share all these details with you. But passive investing in apartments, it can solve a lot of these problems for you. And it did for me. And that's why I want to share this with you. The advantages of being a real estate investor without having to do the work. And that's what's really cool. Investing in apartments, it helps you diversify your investments. It helps you accelerate your retirement savings. It creates cash flow from rental income, protects your income from inflation, puts your assets into a stable investment, which is really nice, reduces your tax burden. I'm going to explain that to you in just a few minutes. And it's as truly hands-off as you want it to be. Some people want to be more active, and some people, like me, when I first started, I didn't have time, but I really wanted to be a real estate investor. And I found this beautiful marriage where I got to invest passively in apartments, grow my wealth, get passive income, and it changed my life forever. And so that's why I want to share this with you. But really quick, if you've never met me before, if you don't know me, my name is Stephen Lee Thomas. I'm a multifamily investor. I'm a business coach. I'm an entrepreneur, and I'm also a webcast host. But it wasn't always like that. I spent nearly 20 years in corporate America. I started as an IT systems analyst, and I went to work for a software company. After that, I did new client implementations. I did that for a number of years. And then the last 12 years before I quit and did this full time, I was actually working for a health insurance company called Centene. At that time, like I mentioned, Centene was one of the fastest growing companies on the Fortune 500 list. It was crazy how much work we were doing, the projects we were doing, the acquisitions we were doing, the growth. Crazy, crazy, crazy busy. But along the way, I learned about something called passive investing in apartments, and it's allowed me to leave my corporate job. And now I do this full time. So in the rest of this video, I'm going to share with you the secrets I've learned and why almost all of my investments are now in apartments. So, a little bit more about me and my partners. Like I said, we've been doing this for a number of years. These are the apartment deals that we've invested in, either we currently own or some of them have gone full cycle. What you'll notice on these, they are large apartment complexes, anywhere from 70 units to just over 400 units. Now, our goal with these is we always underwrite to show that we're going to hold it for 5 years. But if we can do our business plan faster than that, we're absolutely going to do that. So, what we'll do is if we can do it in a year and a half, 3 years maybe, we'll do the whole thing. And in a lot of cases, we're going to give you 88% return in 2.5 years, or 175% return in 4 years, or or what we're going to do is 33% ROI in 2 years. So if you just take a quick look at this, you can see that we're able to drastically outpace what the returns are going to be in your stock portfolio. And like I mentioned, at the end of this, I'm going to share with you how you can actually reduce what you pay in taxes on the money that you're making. So before I get too deep into how apartment investing works, I want to take a look at investing in general. Why are you watching this? Why do you care? Why does anyone invest in anything in the first place? Now, ultimately, we're all seeking what? We're seeking financial freedom. But why do we want financial freedom? What we're seeking truly more than anything is time freedom. And in order for us to do that, our investment portfolio has 4 jobs. Whether you know it or not, your investment portfolio has 4 jobs. So job number 1 is to protect your income from inflation, right? That'd be nice if the money that you're making is able to keep up with or outpace inflation. Job number 2, it's long-term growth. You don't want these short day returns. You need long-term growth. Job number 3 is to protect your purchasing power. That's also really important. As we get older, things get more expensive. We want to protect against purchase. We want our purchasing power to be protected. And job number 4 is to reduce risk and do some hedging against a lot of this volatility that we see. So, taking that a step forward, why invest in alternatives? Because most of us, we go to school, we get a job, and at this job, they really only give us one option. Invest in the stock market, put your money in the 401k. Here's some stock options, which we all know how well those perform these days. Sometimes great, but a lot of times it just crash, it tanks. And so the extra bonus they give you with these investment options, it doesn't mean anything to you. It kind of means crap. So that really sucks. So why alternative investments? Because what we can do is we get low to no correlation with the stock market. It also drastically reduces volatility, and we get enhanced returns. Pretty cool, right? So a lot of people, they don't even know that they can do alternative investments. I mean, there's a lot of different things that are out there, but traditionally we're just not taught about these alternative investments. And the best way I can explain this is just because you get a promotion, just because you learn more, just because you take on more responsibility at work, does not mean they provide any more financial education. They just say, here's the money. You have to go decide, what are you going to do with it? Well, I guess I should put more into my retirement account, my 401k, but it doesn't always perform. And we want to get away from that volatility, like I said. So look, guys, I've done some research here. I went to Cape Gemini World Wealth Report, and here's what I found. I started looking at, how do the ultra wealthy invest their money? What do they do? How are they getting so rich? Once they have all this money, how do they manage it? So here's the punchline. Here's the bottom line of this. The ultra wealthy, they don't just invest in stocks and bonds. So let me break this down for you, okay? What they do is they do have some money in stocks. They have some money they have set aside for fixed income, but the vast majority of their money is in what we call alternatives. Like over 50% of their money is in alternatives. And if you look, the vast majority of that is actually in real estate and in private equity. So if you're investing passively in apartment deals, you essentially are providing that equity. So you're like private money in real estate. So you can very quickly get up to 35% or more into these types of real estate investments. And now you're going to have a portfolio that looks much more like the ultra wealthy. And so just to restate this amounts to a 25-10-53 split. So that's stock market, fixed income alternatives versus the traditional, what we're told by Wall Street is about a 60-40 stock blend. And let me ask you, how has that been doing for you? There's probably some good times and bad times, but how has that been for you over the long run? So next, what I want to do is I want to put this in perspective, okay? So with these apartment deals, I've looked at my portfolio and my partners, and I put together a comparison. And you'll see the light blue here is apartments, and the dark blue here is a stock market. So if you put those side by side, what would that look like if you had invested over 20 years? So let me break down the assumptions here. For a $250,000 investment, you just do this one-time investment of $250,000. You put it in on day one, and you never touch it, okay? Or you just continue to reinvest it. If you're in the apartments, you just continue to reinvest it. So you have a one-time investment of $250,000. You don't take any withdrawals of funds. You don't add anything else to it, and you just let it ride for 20 years. Now we're going to take a look at the average annualized returns, the cash flow, and then the overall value. So your stocks, they're going to grow at somewhere around 10% year over year when things are going good. Apartment is going to be closer to 20% year over year. That's your average annualized returns. The cash flow, here's one of the beautiful things about apartments, is the cash flow, okay? On stocks, how do you make money from stocks? How do you get the money? There's really only one way, and that's you have to sell the stock. And that means it's gone. That means it's not making money for you anymore. But with apartments, with real estate, people pay rent. Cool, right? So you don't actually have to sell anything. The money just keeps coming in. And what we like to do is we like to send those out in what we call a distribution. So you're going to average cash flow wise somewhere around 8%, and you never have to sell anything. And I think that's pretty awesome, right? That's pretty cool. So now if you just take those numbers and you stack them up 20 years, what does that look like? Stocks at the end of that time frame, you're going to have about a $1.7 million in value. That is nice. That is not bad. That's actually nothing to complain about. But if you had just done the same thing and you put your money into apartments instead, that $250,000, it's going to be about $4 million. That's a big difference. And that's pretty exciting, right? Like, I think that's pretty cool. And most people, they just don't know this, unfortunately. So that's why I'm sharing this with you today. Now, why invest passively in real estate? Now, I shared my story with you before. I was busy. I didn't have time for all this stuff. I tried some of it, but I found I had this job. What's beautiful about investing passively in real estate is there's no tenants, there's no toilets, and there's no termites. And that has been really, really, really nice for me in my passive investing. And I actually still passively invest today. I use my self-directed IRA. So I actually am what's called an active investor, where I go find deals and I partner on deals, but I also still continue to invest passively. Like I said, I use my self-directed IRA for that. Now, what I want to do is I want to jump more into apartment investing in and of itself. So how does apartment investing work? What we do, there's really three things here. We buy and improve. We take apartment complex that needs some work, and we go and we buy it and we improve it. The reason why we do this is because it creates more cash flow and it creates more value. Okay. And that's really those next two things, because when we do this, you start to get cash flow. Tenants pay rent. We take that, we pay some of the bills, whatever's left, we give that to you as a distribution. Then you get this long-term growth and profits because we're adding value. It's a business, it's real estate. Now what happens is the value of the property goes up significantly. You're getting cash flow, and we sell the property and you make a ton of money. Okay, now why apartments specifically as opposed to all the other stuff? Well, a lot of it is economies of scale, but I need you to understand that there's a huge shortage of housing right now. And there's a whole lot of people who will probably never be able to own a home at this point. So where do they go? Well, they need a place to live, so they go into apartment houses. So right now there is a high and very consistent rental demand, and that is expected to be around forever. The other thing that happens is there's a very reliable income. And what's nice about it is every year they get to renew their lease. So what happens every year when they get to renew their lease? There's an opportunity. As inflation goes up, we get to increase the rents as well. So potential for higher rent yields, right? So that's really it. Why do we like apartments? Of all real estate, that is why. Now, you might be thinking to yourself, this is really cool, Stephen, but I don't have the time. I definitely don't have the expertise, and it's probably going to cost me a ton of money to do this. Like, I don't have millions of dollars to invest in a deal. Well, don't worry, because I've got you covered. I used to think those same things. Earlier I shared with you when I made my first investment, it was probably one of the busiest times of my life. I had so much going on with starting my family, trying to flip that house, my corporate job, and we sold a house, we moved. It was so much going on. But what I learned was that once I started actually investing in these deals, it actually reduced a lot of stress for me. It reduced a lot of stress for me. I wasn't chasing these things anymore. When something went crazy with the stock market, I didn't even care because it didn't have an impact on my investments. So what happens here is, from a time perspective, this is as passive as you want it to be. If you want to be more involved, you absolutely can be. But we find the deal, we perform the due diligence, that's the inspection part, we acquire the property, we manage the property, and then we give you distributions, and we sell the property, and you get a nice gain on the back end. Now, what about the knowledge, Stephen? How do I learn about all of this? There's actually, you can lean in as much as you want. There's some people who they don't really learn much about it, and other people like to learn more. So the education is there. So we're going to provide you a whole bunch of education. Our goal is to make you comfortable with each of these deals. The other thing is we give you monthly updates on these properties. We share with you about the key performance metrics, and we also share with you the financials. So there is a whole lot of transparency, and we give you the education you need to make the decision so this right fit for you. And then as far as like the investment goes, you'd probably be surprised how small of an investment it is to actually get started. So our typical investment is anywhere from $50,000 to $500,000. What's really cool about this, I mentioned it earlier, is you can actually do this using a 401k or a self-directed IRA. Totally cool. So if you've changed jobs a couple of times and you have access to those funds, I did something and it was so easy to get my money into a self-directed IRA. There was no taxes or anything I had to pay. And the paperwork was, like I said, it was really easy. And so I'm doing that. I'm also passively investing, and I do it with my self-directed IRA. So maybe you've got a bonus, maybe you've got a self-directed IRA, maybe you've got this money you've been looking to invest. What do you do with it? You're losing money because it's sitting in a savings account. So this might be a fantastic opportunity for you, and you don't have to come up with hundreds of thousands or millions of dollars to go buy this apartment complex. And the other thing, like I mentioned, is our goal is to refinance or sell in as little as 3 years, sometimes sooner, sometimes a little bit longer, but it's basically a 3 to 5 year hold. Okay. So the other thing you might be thinking is like, Stephen, okay, so that's good. You talked to me about the apartments and apartment investing and the portfolio. That all makes sense. You talked to me about how much time it's going to take and do I need experience? Okay, I'm good there. But Stephen, what about these risks? What about what's going on in the world? How do we control that? So, before I ever invested in real estate, I spent several months studying how to invest in the stock market. So one of the things I wanted to do, I was like, you know what? I will do some investing in the stock market. I knew I wanted to invest in something. But one of the things that was really hard for me was that I felt like there's really a lot of risk with the stock market. And what really bothered me is I didn't have any control over how the stock was going to perform. I had zero control. All I could do was look at some numbers, and whatever I did, I still felt like I was just kind of crossing my fingers and hoping that it would work out. Now, when I got into real estate, I knew there was going to be risk, but what was appealing to me was that there was really a whole lot more control. It made it a whole lot easier to manage those risks. And what I've learned is there's basically 3 areas of risk. And I'm going to show you what those are. In the next slide, I'm going to talk to you about how we mitigate those risks. And we have way more control than what's going on in the stock market. So risk number 1 here is market fluctuations. Now, what do you do for economic downturns or changes in the local market and conditions? And how does that affect the property value? That's number one. Number two is tenant turnover and vacancy, right? If somebody's not there, you're not making any money. That's one of the problems with single family homes. Somebody moves out, you go from 100% occupied to 0% occupied, and that's tough, right? So that is something you got to manage. And then, unexpected maintenance, renovation costs. How do you handle that? Like, nobody wants to come up with a whole bunch of money to fix something that takes away from your cash flow. How do we manage that? So here's exactly what we do. We do risk mitigation. And number one is we do a lot of detailed market analysis, and we like diversification. So we go into these markets, we do research, we invest in stable growing markets with diverse employment sectors. We make sure that the market in and of itself is going to support everything here. Now, the next thing is when it comes to tenants and turnover, we are very engaged with property management. We manage things very closely with them. But what we do is we focus really, truly on tenant satisfaction. If we can keep the residents happy, keep them engaged and listen to them and work with them, what happens is we get a lot of renewals, we get a lot of referrals, and that's how we drive occupancy at our properties. It's something that we actively focus on. And the last one here is managing those unexpected events. So we put a lot of time and effort into a due diligence, and this is basically the inspection when we go in to the property. So if you ever bought a home, you do this home inspection. Well, what we do is we do a full inspection of every unit at the property and everything at the property. So we find every little thing that we can. We have this huge checklist. This team shows up. It's a couple days to go do these inspections, and we take care of everything. We get this big list, and we manage all of that, and we get a nice, healthy budget going into it. So we don't have to deal with any of those unknowns, any of that risk. So what that means is we've talked about what your portfolio should do. We've talked about how to get away from your traditional investments. We talked about how alternatives really should be part of your investment portfolio, and why we really like apartment specifically. We've talked about, how are you going to commit the time? Well, there's really not a lot of time there. And then we've also talked about the risks that are involved and how we mitigate that. So this is all pretty cool, right? I think, we've been doing this for a while, and we got a lot of this figured out. So to me, this should be pretty exciting, right? This is pretty cool stuff. Now, I've got one more thing I want to show you really quick before we end, and that is paying less in taxes. This is pretty cool. So I remember the first year I invested passively in these apartment deals. So we're doing our taxes. That time, my accountant would actually show up to my house, and I got all my check stubs from my investments, my tax documents, and I brought them over to the accountant. And so very quickly, she told me, she's like, I never want to see your check stubs. She only wants to see my tax documents with a document called a K-1. And I was like, well, why is that? And she's like, well, you're likely going to have these paper losses. Like it doesn't matter what goes into your account. I just need to see the tax documents. So what I learned is that you can actually have passive losses that can almost completely offset your gains. Yeah, I'm going to say that again. You can have passive losses on paper that offset your gains. So you're actually paying less in taxes on the money that you're making compared to anything else that's making money for you, your job or any of your other investments, because you get to leverage what we call depreciation and something called bonus depreciation. And I can tell you, to this day, I paid virtually nothing in taxes on the money I've made through real estate investing. That's pretty awesome, right? Like, I think that's pretty cool, and it's all legal. Okay, so we work with tax consultants. They put the documentation together for us. It's all documented, maintained. But that is one of the huge advantages. So if you're looking to offset these gains, this might be a fantastic way to do this. So let me walk you through this really quick. So as an example, let's say you make $100,000 investment. That very easily in year one could generate about a $60,000 depreciation or $60,000 in losses in year one. Here's where that gets really cool is, so you invest $100,000, or you're not going to get that back right away, but then you're going to get this big loss. It's gonna show this like negative amount for you, like, so we're gonna send distributions. You're gonna have this loss on paper, and you're not gonna pay anything in taxes on those distributions. Because now here's the thing: if you do multiple of these investments, you can offset your passive income with these losses. Okay, so let's say you make 2 or 3 or 4 investments, one sells, make a bunch of money. you can actually take from another deal that has these losses, and you can take those losses and you can offset gains from another deal. And that's really, really, really cool. Okay. So I get this question a lot. Does that go against my W 2 income? And the answer is no. That is reserved for your passive investments. Now, the exception is if you're an active real estate investor, if you're an active real estate professional, you'd have to talk to your CPA about that if you qualify for it. But if you're an active real estate professional, then you can offset W-2. Maybe you've got that from a partner, you got W-2, and then your losses in real estate and these deals, you can squish all that together. And then there's the other last piece here is you can accelerate a lot of this depreciation with something called bonus depreciation. We do a thing called cost segregation, a little bit more complicated, but you can squish this depreciation over time. You can shove that into year one and have big losses on year one. Okay. So there's a lot more that goes into how these losses work, these paper losses work, and depreciation. But I just wanted to make sure that you had some insight into that. All right. So, guys, I appreciate you taking the time to tune in and listen to this. There's a lot of information here, and I would love the opportunity to share more with you and get to know you better and understand your journey. And so what I'm going to ask you to do, here's the next steps. If this resonated with you at all, there's going to be a link down below this video, and that's going to get you into just a quick short call. That's an introductory call. It's not a sales pitch. What we're going to do is we're going to take a look at where you're at, what your goals are, and maybe what's getting in the way. What are you frustrated with about your current investment strategy? And we're going to give you some resources. And ultimately, our goal, our job is to help you decide, is apartment investing right for you? That's your decision. It's not mine. I just wanted to share this information with you. So go ahead and book that call. Prepare for our conversation. Right? Just come with questions. Just think about this. There's going to be a few questions to answer before you hop on the call. And we're just going to get to know each other, have a little chat. And then, like I said, share some more resources with you. And I want to help you decide, is this the right opportunity for you? And if it makes sense, go ahead and join our mailing list. I appreciate your time so much, and I look forward to chatting with you soon. Thanks.